All right. I actually have three quotes at the bottom, and that one that Alex just quoted is Thomas Edison. Hell, there are no rules here. We're trying to accomplish something. The other one that's really important is actually a quote by Upton Sinclair, the great muckraker. It's hard to get a man to understand something when his salary depends on him not understanding it. And in this field, it's really about the incentives. What are we incentivized to do to get it right? And we have three entrepreneurs who are now coming up on stage from three amazing companies, all of which are, and I'll have them just briefly introduce themselves. Three amazing companies, all in slightly different ways, trying to solve the problem of finding and keeping good caregivers. So, Josh, why don't you just quickly, the encapsulated version, who you are, name of the company, what you do.
Fantastic. So my name is Josh Bruno. I'm the founder and CEO of Home Team. We are a provider of in-home senior care. So we employ home health aides in 3 states that go into family members' homes and help with all the ADLs that you need. And we also build our own technology. So the infrastructure software in the back end and the software on a tablet in the home that keeps families up to date.
Okay. Sherwin?
I'm Sherwin Sheik, the founder and CEO of CareLinks. We're the nation's largest caregiver marketplace, focused specifically on the senior care market and patients with chronic conditions. We have over 140,000 professional caregivers on our platform. We're operating in over 3,000 cities. And our model is different in that we directly set families up as the employer of record, but then we give them tools to manage all the care via web and mobile. And consequently, families are saving between 30 to 50%, while professional caregivers are earning about 25% higher wages.
Sandy?
Hi, I'm Sandy. I'm one of the founders of Honor, and our mission in life is to change the way we care for our parents. I run engineering at Honor. I have an engineering background, and our take is that caregiving has sort of been cast aside for a while, and we want to bring it back to the limelight, bring the conversation to the general public. And what our general mantra is that if we care for those who care for others, everybody wins.
Great. So the topic today is one that the three of you know quite well, and that is about the relationship with venture capitalists, right? One of the necessities for any new business is to figure out how to get the capital to grow. And there's many ways to do that. And then there's a category of startup companies that have the potential to also create a return on investment of the size and over a time frame that is attractive to a category of investor. They live here and other places in Silicon Valley, venture capitalists. But it is a daunting task for the entrepreneur. The venture capitalist could see 1,000 companies a year. How do you stand out? What is it that they know and don't know about what you do? And the three of you are in a space where, as Alex or Lisa said earlier, it is just laughable to think that the topic of caregiving would even be attractive to these folks that invested in Facebook and Google and Snapchat and all of these other technology-driven social media products. So I'm going to start with you, Sandy. So give everybody just an idea of just the challenges of communicating this space to mostly men who haven't really a clue unless they have some personal caregiver story. And Steve Jurvetson, has often said, in this space, there really is a circle of empathy, right? We saw all the hands go up earlier. everybody has a caregiving story, if not directly, at most once or twice removed. So why don't you
Sure.
just jump in?
And I think it's important to realize that everyone does have a personal story, but then there's a big disconnect between that personal story and then, can I actually make money on this? And so I think traditionally VCs have equated the senior space as not profitable because they see seniors and they see technology and they just don't mix. And I think it's relatively naive perception, just because if you think about what technology is, it's a car, it's a microwave, it's a toaster. It's how you perceive what you're using as technology. And so one of I think the amazing thing that's happening now with these 3 companies and sort of a handful more is that VCs are finally seeing that there's actually return. And it's not just about, caregiving as a task, as a company, but it's more about how are you translating that to scale, to technology, to a team that can actually do it. And if I put on my investor hat, since I've done some angel investing in my spare time, I guess, you're looking for not just the idea, because ideas are a dime a dozen, anybody can have ideas are cheap. It's who's doing the idea, how are you executing on it, and is the idea big enough? Like, is there a giant, massive market behind that idea? And can these people who are doing this idea succeed on that space? And so it's a combination of things, and I think finally, in the last 5 or 6 years, I think with Honor's $20 million in funding, $80 million came after that. So it's great that these things are being spurred along, people are seeing it, but there's a lot of work to do.
Right, sure.
Yeah, so I have from just the founder perspective, a very different background coming into this space. So a lot of people know my personal story. I started CareLinks because my sister has MS and my uncle had ALS. But then prior to this, I was in the hedge fund industry, trading and investing within the healthcare space. And so when I moved from that world into the entrepreneurial world to really solve what my family was going through and interacting with venture capitalists trying to get this company funded, we've been going at it for about 5 years. I really learned a lot. And one question I have before I kind of jump in is, how many of you in the audience are actually entrepreneurs? Okay, so looks like the majority. So I'm going to speak to you. Sorry if the investors in the community that are out there. And the question I want to ask yourself is, why do you want venture capital? Obviously, you need funding to grow your business, but there's always different ways to fund your business. When I first started out, it was no one wanted to even think about caregiving. And it was what Facebook was going public. It's like, what's the next social network company that I want?
What year did you
2011, 2012
right,
is when
so
I went.
5 years ago.
5 years ago. It's radically changed from then to now. And obviously we have competitors coming in the space, and the awareness of the venture community has finally changed, and they're starting to see the opportunity. But what that lesson has taught me, being kind of early to market, is you got to be careful as an entrepreneur when you go seek venture capital and how much money do you actually want to raise. Because these guys are going to become, basically you're married to them. And they're going to dictate how you grow your business. They're going to dictate your basically strategy. And a lot of times, just as an entrepreneur, you want to make sure that you build the best product and service, because all of us are coming into this space mission-driven. And you want to make sure before you take that big influence of capital that you actually have a proven model that works, that achieves the mission that you want to achieve and the goals that you want to set out. So my question again is, when I look at sources of funding, obviously the VC community has changed in their view, but also look at strategic capital. That's the kind of the way that I started to grow the business, and it was slow and steady, finding basically strategics that have relationships that can help expand the business and have you go to market a lot faster. So just keep in mind that there's other alternatives to fund your businesses than traditional venture.
Fantastic. So I think on the topic of senior care and venture capital, the biggest challenge we have in our segment of the industry, and all of us in this room as entrepreneurs, is staying true to what we believe is right and the problems that we're solving, and staying true to our mission. And so Home Team, we've had a fun journey through all of this. My background, I actually worked as a VC at Bain Ventures for a couple of years before leaving and starting Home Team. I left because of my grandfather and the struggles my family had caring for him. And I spent, and this is relevant here in a second, I promise, but I spent 6 months volunteering inside of mom and pop home care agencies and nursing homes. I was a caregiver. I drove a bus for a while. I set up Facebook pages. I just did what it took to understand what is really the problem here. And coming out of it, I saw that yes, we need technology in this industry, but mostly we need to empower our home health aides because they're paid nothing today. They're given no training, no support, no mentorship, no recognition for a job well done, no careers, intermittent work. They have trouble putting food on the table for their kids, yet we expect them to take great care of our parents. That's crazy. And so when I saw this, I said, from day one at Home Team, we are going to empower that caregiver. They're going to be a W-2 employee. We're going to give them a career. We're going to pay for training. They're going to be a close member of the team. They're going to come to our all-hands meetings. And I say that because that was, I firmly believe, what needed to happen to change this industry. And so then we show up on Sand Hill Road. And I was kind of having PTSD as I was jogging this morning up and down Sand Hill Road because we got kicked out of every single office up and down Sand Hill 2.5 years ago for saying we're going to W-2 our workers. And everyone said, did you watch Uber and Lyft? They're $10.99. Come on, kid, what are you doing? And I was like, this isn't taxi. This is caring for our parents, and we have to do something very different. Found one or two investors that believed in us. We raised our first $10 million and proved that this model does work, that by taking care of your employees, they can take better care of others. And subsequently, we've raised another $32 million after that. And that's been because we stayed true to our mission. We've proved that we're really solving a problem. But sometimes you got to know when to just go against the grain a little bit, especially in this industry, because there hasn't been too much investment in the past in this space.
So on that theme of staying true to the mission, all three of you are, I would say I could definitely shoehorn all three of you into the category of social entrepreneur, in that you're using the marketplace to address what we've already heard, a significant, social challenge. That said, the conversation right before they kick you out of the VC's office, all three of you are out to change the world, and make it a better place. This is a good thing, right? Do these guys care? Do they understand how that translates into opportunity and return on investment? To what extent do you have to just pull that and make it so obvious to them? Or are you seeing in the industry, in the venture industry, are you seeing kind of that farsightedness where people say, oh yeah, that translates to this, that's this amount of people, they're already doing the math.
Yeah.
Yeah, I mean, from my perspective is I always, like Sandy mentioned earlier, 1 in 4 Americans are currently dealing with a caregiving event. And so when you go into these meetings, one of the first things I ask is, how many of you have had experience with a loved one or family needing care? And then immediately you put everyone in that mindset of, yeah, they've gone through this. And what we also realize is the partners now who are the basically 40s to 50-year-olds, they're going through it a lot of times. And they're like, I just been through this. And they understand the problems that we're starting to deal with and what we're really trying to solve. And so they have the empathy because they are personally living through it.
Right.
Yeah, so I think as I've seen the investors that are most interested in this space, or in the senior care space, they first and foremost, because they're managing other people's money, they're managing firefighters' pensions and things like that. They have to make a smart business decision. And so I don't think anyone's going to invest in the space if there isn't a solid business behind it. I also personally feel responsible for developing a long-lasting, freestanding business because we're taking care of people's parents, and we have hundreds of people whose livelihood depends on Home Team actually delivering a paycheck each week. So we can't be irresponsible. But what I've found, the difference is some of these investors, so once they check the box of, this might work, this could be a real business, I think our investors spend more time with Home Team and think more about us because of how much they care about the problems we're solving. It's very personal to them. It's personal to the people around them. And so they're helping a lot with recruiting and spending time in our office and helping us think through a lot of the tough challenges that we face. So I would say certainly look for an investor that really believes in what you're doing, but also I wouldn't take investment from somebody who just likes the mission and doesn't think it's a real business, because maybe you need to think about if it's a real business.
So that raises a really interesting issue, and that is, what is the additional value that your investor can bring to the table in addition to writing a check? And Sandy, you and Seth and the other founders of Honor, each of you kind of comes out of different parts. You came out of tech, so did Seth. You came out of finance. You came out of finance, slightly different places. But how did it help that you came out of tech in those conversations? And what were you looking for besides the check?
Sure. I think the one thing that we all have to realize is that healthcare and sort of the space in general has been very local. They always say healthcare is local. And so one of the challenges of being in this space and convincing a venture, or any sort of backer to come and back you is that how do you take something that's very local and expand it? So how do you scale out? And so I think one of the things that was attractive about our team is that we did come from tech, but tech for tech's sake is, that's boring, that's old school. You need to figure out how do you take the learnings that you've done in your particular industry, finance, tech, whatever, and translate that to taking an industry that's been very hyper-local and very well-intentioned, but suffers from lack of efficiency, lack of innovation, and just lack of thinking, wide scale and big and massive. And I think one of the things that, our investor, Mark Andreessen, has done really well is that, one, he does believe in the mission. I think mission is fantastic. It gets you to sort of step A. But step B is, how do you take that mission and you translate it to, one, a sustainable business, but a sustainable business that can grow, that can scale, and that can last. One of the goals for us at Honor was that this should outlive me, like this should take care of me when I'm old. And that's a great mission for us, just to think that far ahead and make decisions in financing, in how you build the product, how you build the team, so that you are setting yourself up to then go big, not just, we're not going to do a quick, Apple App Store play where you sell the next day. That's not what this is about. This is how do you take something that's fundamentally, right now kind of broken, like, home care is kind of broken right now. How do you fix it in a way that's not just going to be a Band-Aid, but it's going to be a sustainable, growing, effort and business and all those great things.
So what were some things you were looking for besides the money?
Yeah, I completely agree. I mean, it's about the expertise and the willingness to dive in. So our most recent investors were Oak Healthcare and Kaiser Permanente, because our biggest challenges right now and the things that we're facing right now are, how do we integrate our service, which is a really reliable, really stable service, into the broader healthcare system? If you think about a lot of the challenges older adults face, you're going to the hospital 2 to 3 times a year. And then when you get discharged, you maybe go to a facility or you maybe get sent straight home, but it's often you're wheeled outside and people say, good luck. And that transition home is the most dangerous part of navigating the healthcare system, and it's the part that we can help the most. So when we brought that idea to Kaiser and to Oak, suddenly, these are the investors that busted out the whiteboard and came in with a million ideas, brought the right people into the room. Oak brought Zeke Emanuel into our office and had him saying, what's your plan? And I said, I'm going to do this, this, and this. He's like, no, you need to go over here, and here's some good ideas. But somebody who wakes up in the middle of the night and shoots you an email with another crazy idea and is willing to come brainstorm it with you, that's the investor that you want to have. Because I think anyone can really write a check. But and the last thing I'll add is looking for the investors with the right set of expertise. Oak is very different than a lot of other investment firms out there, and these other firms are probably better fits for other companies. So just really taking the time to think through what a good partnership would be rather than just hustling the pitch.
Yeah. You want to weigh in on this?
Yeah, I mean, majority of our funding through date has come through strategic investors. So one largest, basically, they own hospitals, post-acute rehab centers, skilled nursing facilities, and So as we're trying to build our business, it's like exactly what Josh was saying is how do we get closer to the point of discharge? And so for us, we wanted to basically partner with people who had the industry experience and could actually help us get to market faster so we could ultimately help more families. And so our investors are these strategics that are dealing with these patients. They realize that they have a problem when they discharge. They don't have visibility into the home. And so for our standpoint is we just didn't need capital. We wanted capital to come from sources that actually can help us help more families. And so that's why we went down the strategic route.
Right. You know, another thing that distinguishes all three of you, your companies, I'm sure there's plenty of things that distinguish you individually as well, but one of the things that you have in common is that all three companies have a goal to raise the professional quality of the in-home paid caregiver. And you all pay higher than the local market rate. So that was, one thing. So maybe you can also then expand the labor pool by bringing in people who previously wouldn't have found this as a career path that they would be interested in. Training, things like that. You and I have talked about this as well. When you talk to your investors about this kind of a goal, right? That's plowing money in, right? In the old days, that was called overhead, right? So what was the character? And then also you started out with people being employees and getting a W-2. You did as well. Honor originally started out paying people as independent contractors with a 1099 and then changed. That had to have been a conversation with the investors. I would have loved to have been a fly on the wall for that one. But so here you're trying to actually change the landscape, the very character of in-home caregiving. And so how does that conversation happen? Anyway.
Yeah, on our platform's very different in this capacity in that we only excel as the caregivers earn higher wages. So we don't set caregiver wages. We tell them if they're CNA, MA, LVN, RN in their geography what the fair market labor wage is. And we just charge a 15% markup on top of that. And then we handle all make sure that they're bonded and insured, their tax filing, tax remittance, they get their W-2 at the end of the year, they're insured and bonded. But our goal is ultimately there's a huge supply and demand imbalance. And we believe the scarcest resource is a caregiver. And our mission is completely aligned with that we only make money if the caregivers are taken care of and they earn the highest wage. And they can see what the fair market clearing price is, and they can price themselves accordingly, which is why they're earning about 25 to 30% higher wages than traditional agencies. We don't set their price, they set their own price.
Interesting.
And for Honor, I think one of the biggest insights for us was that the number one reason why caregivers today are unhappy is they don't get respect. It's not necessarily about wage or sort of the more sort of functional aspects of their jobs, but they kept telling us we are professionals, we are considered unskilled labor, but what we do is super skilled. And so one of the things that we really realized was, me coming from a tech background, I don't quite understand what it is to be a caregiver. I have to put myself in those shoes. And so, surrounding yourself with people who really understand that was really important. So when we hired Phaedra, who is in charge of our care at office, she has 13 years of labor experience. She understood what it was like, and so she helped us learn how do people really understand, what it is to be, earning $12 to $15 an hour, living paycheck to paycheck. 56% of caregivers today are on welfare. Like, how do you expect someone on welfare to take care of your parents in their own homes? And so one of the things that we had to try to do was how do we create an environment, a system, a path for these people to really succeed. And if they are successful, we are successful. And so what we consider our product is the caregiver. It's not the tech, it's not the platform, it's not everything else, it's not the website or whatever. If we had fantastic tech and we can't send a fantastic human to your home, we've failed. And so I think the change in how you talk to a VC is that you don't talk to them about your tech product, you talk to them about the human product. And the human product is what's important. And that's what, you and I and our grandparents and our parents and our loved ones really interface with. And that's what's really, really key to how do you make a service really succeed.
Want to weigh in?
Yeah, so I guess going back to what's the conversation like with a VC when you tell them you're going to invest in caregiver programs rather than technology? And again, PTSD, you're bringing it back. But when I was having conversations for our B round, investors were looking at our P&L and saw, wow, okay, you have 20 engineers on staff, you're building great technology, okay, nice, but you're spending as much or more on your caregiver training programs and your professional development and guaranteeing hours and all these things that we do for our caregivers. It's actually a lot more than the engineers, as it turns out. And so we have these tech investors saying, why is this a tech company? Why am I going to invest? And my only advice to an entrepreneur would be, it's all about the results. And so I had to come back. I'd made my nice pitch deck and I thought it was perfect. I was a former VC, I've got this, right? But I didn't actually take the time to speak about the results of the non-tech aspect of our business. And we came back with things like, look how low our churn is, look at our customer satisfaction, look at all these case studies of all the families that are so happy and how this relates back to the weird things we did because we're a senior care company. We started to get some more nodding heads. Still got kicked out of a lot of places, but that's just going to happen. And so I think that almost any business in our industry is going to face a lot of that challenge. And it's again, going back to what I was saying earlier, just staying true to what you really believe is going to make a difference.
So, Sherwin, you alluded to the battle for labor, which, just from, the statistics, 117 million people are going to be in need of care with unpaid and paid. It's still, our forecast is only 45 million people doing the caregiving. Huge gap. On the paid side, it's, 5 million. I mean, it's really small. So how do you start to create this? Because each of your company's abilities to grow, you have to handle the supply side. How do you address that?
Yeah, so from our standpoint, we kind of look at ourselves as LinkedIn sometimes, because we now have over 140,000 providers on our platform. And a lot of these caregivers are working at the traditional agencies, Home Instead, Visiting Angels, Comfort Care. But what they're looking at is, what is the new job opportunity that's coming into their local geography? And they want higher wages, and they want to be able to sustain their families. And so from our standpoint, building out the marketplace, we have basically been able to build out the supply side. And now it's just all about getting awareness on the demand side. And really, in my belief, is in the marketplace model is truly where the caregivers are going to be able to earn the highest possible wage, because they get to set their own wage rate. They could see what the fair market labor wages are. And as long as we're able to provide the training that they need through online curriculum and training courses to further advance their careers, we're basically enabling them to become their own employers, their own bosses. And as long as we take care of all the back-end administration scheduling, they're going to earn the highest possible wage. And that's why we believe we're getting about 5,000 to 6,000 new providers joining our platform every single month across the U.S.
Yeah. How do you see this? You're in the New York tri-state area. Mm-hmm. There are large players like Visiting Nurse Service of New York, over $1 billion company, organization. I'm not sure on its for-profit status. How do you see the battle for labor? I'm in New York. I mean, it's hard.
It's all about creating good jobs that people are proud of. I want my caregivers to go home every day, and when they're making dinner for their kids, to talk about their job and their work in a way that they're really proud of, and inspiring their children to want to work like mom or dad did in an industry that they believe in. And it takes a long time to build that. So if you look at our industry today, 2.6 million professional caregivers out there, and they are treated so poorly. And I witnessed this when I was volunteering inside of those mom and pop agencies. And I think the agencies mean well. they just don't have the resources available to treat caregivers like they deserve. So the battle for labor, I firmly believe, is going to come down to who can provide careers, who can provide something for a caregiver that is steady and stable and allows them to focus on their passion, which is helping people. Even though at Home Team our annual take-home pay ends up being about double what a caregiver would make with a mom-and-pop agency, it's still not that high of pay, unfortunately. It really isn't. Our caregivers could actually go earn more if they worked at Costco. And I'm just going to say it, it's a fact. But they're here working in our industry because they believe in helping others. And they believe they're making the world a better place, and they really are. So the battle for labor is who can allow this industry to do what they want to do. And I think we're seeing a lot of companies that believe in that same mission. I know that the three of us up here certainly believe in that. We all have slightly different approaches, but I think we're all able to allow caregivers to focus on what they want to do.
You want to weigh in on this?
Yeah, I think, what like Josh said, we've had cases where a lot of caregivers would rather do house cleaning because they can make more. Like you can make more cleaning a house than you can taking care of someone's loved one. And so I think creating a system where they have predictability, they have job stability, and they feel respect. Like again, it's got to go back to the respect aspect where you feel like you're doing good and you're being recognized for it. It's validation. Everybody wants to feel good about what they do. So creating this professionalism around this service, around this job, I think is something that's lacking right now. It's just, why would I go do that when I could do something else? And so, like Josh said, we all doing it different ways, but I think the goal obviously is to up-level the caregivers so they feel like this is something that's respectful and has a long sustainability for a career.
And with that, we've run out of time. So thank the panel.
Thank you.